All right, good evening, everyone. Welcome back to Compound Interesting. My name is Emil, and in today's video, we're going to be running through ARK Invest's big ideas of 2021. So this is a report that they release every year that kind of gives you a clearer picture of the future and will help you potentially invest accordingly for the future. So disclaimers, like they don't really give you any stock ideas. Well, they give you stock ideas, but they don't name any particular stocks or companies directly. However, you can definitely infer some of the companies that they're interested in investing in through reading through this report. There's quite a lot of ideas that we're going to get through in this video, but the report itself is quite long, so I'll probably divide it up into two parts. So I'm always really excited when ARK Invest releases this report because it really opens up your mind and it's just extraordinarily interesting, to say the least. So yeah, I thought it was a little bit easier if I recorded through the computer rather than the normal way, because yeah, we're just going to be looking through the report. So I think this is a bit of an easier way to do it. So the quality isn't as good, but I don't think that really matters at all. So I have a few notes here, so let's dive straight in. Introduction, yeah, I think everyone knows what ARK Invest do. They invest in disruptive innovation. So they're obviously only interested in companies that are completely disrupting traditional companies and completely changing our world, because there's massive ROI potential in all these industries. So there's 12 industries and 12 ideas that they presented this year. So yeah, they're just kind of outlining the risks there, so we don't really care about that because high risk, high reward. Let's go max risk, max gains. Let's do that. So up first we have deep learning. So deep learning is using data to write code. So instead of writing code by humans, deep learning uses data to write new code and kind of teach itself. So artificial intelligence, deep learning, kind of the same thing. So here we can see the growth in software capability, and now we're in 2020 and deep learning powers all large-scale internet services like Google search, social media, TikTok, video recommendations. Now, what's going to come up next? We believe the most important software will be created by deep learning, enabling self-driving cars, accelerated drug discovery, and more. Here's a few examples of deep learning. You can see how fast TikTok has grown, and that's because it uses deep learning algorithms to recommend you videos. So that's why it's even more addictive than Snapchat and Pinterest, probably Facebook and Instagram again as well. TikTok just completely exploded out of nowhere with their crazy algorithms that just gets you so hooked. Self-driving cars as well obviously use deep learning to be able to drive better. I don't know why they used Waymo here, but Waymo are technically ahead of Tesla in the fact that they already have driverless cars driving people around in robotaxis in one geofenced area. However, I think Tesla long term will do much better than Waymo. Conversational computers as well. So in the future, you're not going to just be talking to other humans. You'll be talking to your watch, you'll be talking to your phone, you'll be talking to your fridge, etc., etc. And what companies already do that? The likes of Amazon, Google, Apple with Siri. I know I'm kind of running through this fast, so if you want to dive deeper and read everything here, of course, the report is going to be linked in the description if you want to dive deeply into it. But this is just kind of to give you a brief summary of all the important and most interesting ideas, in my opinion. So here we can see that it's getting more and more expensive to train the deep learning hardware. So we can see Tesla Autopilot here is 2019, and it costs like just under $1 million to train. So with this increase in price to train the hardware, the AI chip market is going to increase massively. So they're thinking 33% compound annual growth rate from 5 billion now to 22 billion in 2025. And by the time we get to 2030, so by the time we get to 2030, that will be 91 billion if they keep growing at a 33 compound annual growth rate. So which companies make these computer chips? NVIDIA, Qualcomm, Amazon. Amazon have the data centers. They have their Amazon Web Services, and they actually make their own data center chips. So we'll talk about that in 1 second. So if you want to invest in deep learning, you can either invest in companies that are using deep learning, the likes of Tesla, Google, Apple, or you can invest in companies that are making the chips like NVIDIA, Qualcomm, Amazon as well. Here we have AI is expanding from vision to language. Yeah, we won't go too into that. GP3, this is a really advanced AI, so it can understand language by itself and summarize this very complicated English language into plain English, basically. Can do all these other things as well, write emails, design web pages, etc. So that now they're showing how much deep learning could add to market cap. So they think 30 trillion by 2037. So big idea number 2, the reinvention of the data center. Data centers, the power plants of computation. So what they mean by this, or what is likely to happen, is that instead of running software on your personal computer or your computer in your workplace, you'll upload your software to a supercomputer in a data center, and the data center will run that software for you and send you back the results. So the data center will be completely dominated by the likes of GPUs and TPUs, which are made by the likes of NVIDIA, TSMC, what's that, Taiwan semiconductor company or whatever, and Intel is quickly getting displaced. Their old x86 hardware is getting very kind of useless in comparison. So you can see that here, 2020, this is 2020 in the middle here, 92% use x86 hardware. This is created by Intel, but in the future, everything's going to be switching to ARM. So ARM is the chips that are found in smartphones, and they were originally put into smartphones because they're more efficient, but now they're actually getting better than the legacy x86 hardware. So now they're actually being put into full-size computers like the M1 chip that's going into the new Mac computers. Again, a huge component of this is NVIDIA and Apple as well with their M1 chips that they're making. So yeah, we can see Intel's frozen in time. So this is their production node. So you want a smaller nanometers, and you can see that Intel, they haven't really executed in the last few years. They're no longer following Moore's law, so they've slowed down, and that's why their stock price is doing quite poorly. And in comparisons, Taiwan semiconductor company already has 5 nanometer processors, while Intel is still at 10. So basically, if you own Intel, probably strongly consider selling that and buy the likes of Apple, NVIDIA, Taiwan semiconductor company, AMD, Amazon. This is a comparison between Amazon's web service, Intel's version of their chips. So this is performance 100%, and Amazon's own chip, their ARM Graviton chip here, is 119%, so 19% better. Cost is 30% cheaper, and performance per hour, so that's just that multiplied by that gives you this. So it's 50% better, Amazon's own ARM Graviton chip that they've developed instead of Intel's Xeon chip. All right, the next few ideas are really, really exciting. So I know these are a bit technical, so don't worry, the next ones are really, really kind of out there and interesting and crazy. So big idea number 3, virtual worlds. So this is the likes of virtual and augmented reality. So virtual worlds haven't really taken off yet, but they're definitely on the cusp. And by 2025, the revenue from virtual worlds will have doubled. So I think, who knows when it's going to happen, but it will happen fast. People will stop playing normal games, and everyone will be playing in virtual worlds. And also they add to this idea, instead of you paying upfront for your game, like instead of paying $60 or €80 or however much Call of Duty is today, in the future you're just going to get the games for free, and they're going to make their whole revenue from in-game purchases, like the Fortnite model, which did so well. So you go into your game, you get the game for free, and then you go and buy, like, skins, you go buy weapons, you go buy upgrades, etc., etc. So that's what they're showing here. And they say video games are going to become the third places away from work, meaning that people are going to spend more time playing video games. I don't know, I wouldn't have thought that myself, because I thought people were playing less video games, but maybe that's just me because I'm no longer a teenager. I don't really play video games anymore. But yeah, they say on average people are going to spend 40% more time playing video games in the future as games get better and better and better. Augmented reality, now this is really cool. This is something I've talked about before. Apple glasses that might come out in the not so distant future. So instead of using a smartphone, smartphones will be gone, and you'll just use your smart glasses to do everything, to send text, to go on Google Maps, to look up stuff on Google, to go on Instagram, etc., etc. So augmented reality, probably Apple glasses will be the winner there if they ever bring them out. So ARK forecasts that by 2030, the AR market will scale 130-fold. So it's going to go from 1 billion today to 130 billion. So what kind of companies are you looking into with that? You're obviously looking into Facebook with their Oculus headsets, Apple with their AR glasses, Apple glasses, which might come out in a few years, and then also like standard gaming companies like Activision and EA Sports, etc., etc. But yeah, again, you're kind of seeing a general trend here. The likes of Nvidia and the likes of FANG stocks are really primed to do well in ARK's view of the future. This is a weird unit of visual immersion metric that ARK have made up, so I don't know, I don't really understand it, but basically it's saying virtual reality is going to approach reality by 2030, so that's kind of not too out there to imagine. virtual reality be almost indistinguishable from reality very soon. So we can see in 2020, in-game spend in gaming is already more than 75% of gaming is in-game spend, and then people actually going out and buying the games up front is only 25% or so of total revenue. And by 2025, it's going to be completely in-game spend. Everything's going to be the freemium model. Here's another really, really exciting one that I've talked about before. This is digital wallets. So the likes of Square, Cash App, Venmo from PayPal, Revolut in Ireland and Europe. So they call this a $4.6 trillion opportunity in your pocket. So I stopped buying Square stock a while ago. Like I started buying it like $50, $40. Saw it go all the way up to $200 plus. So obviously when you get like a 5x, you're kind of more skeptical of continuing to buy in. So I kind of had stopped buying in. But after looking through this big idea here, you can kind of see that Square still has an enormous amount to grow. So this is the most important metric here. So they're saying that Square or a digital wallet user could be eventually worth 20,000 per user or per customer. Here they're showing how much mobile wallets are taking off in China. So as a percentage, in black is the China GDP, and you can see the digital wallet transaction spend is much bigger than the GDP now, and probably will continue that way. So here's a map of all the different digital wallets globally. But here's the most interesting thing, or one of the most interesting things. Here we can see the acquisition cost for a digital wallet is like $20, but the the acquisition cost for a traditional banking customer is like $2,000. So it's so much cheaper for the likes of Cash App and Venmo because of their viral marketing and because of their network effects to acquire customers. It's so much easier. So that's why they just completely exploded in number of users on Venmo and Cash App. So you can see, oh my God, like already more than JP Morgan. And it doesn't look like it's going to slow down. Does that graph look like it's slowing down at all? Not really. So now here you can see the customer acquisition cost. Here's a digital wallet, $20, and traditional banking, you can see like anywhere from, to get a credit card customer, $250 to $1,500. Same with just a standard retail banking account, etc., etc. Digital wallet, only $20 that offer all these services. So you can just see how much money that they could potentially make in the future once all these services become very mainstream to be used on a digital wallet. Here they're showing how the bank costs for each of their branches is increasing, but like they're losing customers to the likes of the digital wallets. Traditional banks are facing potentially sizable risks. So here you can see the unsecured consumer debt in the US, and you can see that digital wallets are really starting to eat into banks. See the banks is decreasing while digital wallets is really, really quickly increasing. So here's the very interesting point. They say at maturity, each digital wallet user could be worth 20,000 at the end of the day, because you have offline online commerce. So every time you buy something online, Cash App, let's just use Cash App as the example. Cash App get a percentage of that transaction. Payments, the same thing. Insurance that they could offer through Cash App. Personal credit and mortgages, that's how much a mortgage is to the banks. That's how much they'll make on average from all their customers' mortgages per person. Savings and spending account, and brokerage as well. So people using Cash App to buy stocks and Bitcoin for that matter. So I kind of just did a very quick calculation here. So to be a little bit more conservative, instead of taking the $20,000 number and just cutting that in half to $10,000, and if we look here, we can see the number of users that Square has, or Cash App has now, 60 million. So let's say by 2030, I gave you that $10,000 per user figure multiplied by, so let's say by 2030, Cash App gets to only 100 million. So that's in 10 years. Like you can imagine how much further this could go. So 100 million is probably a little bit conservative by the time we get to 2030. So, but regardless, and let's not even take into effect international, like Cash App could expand internationally. They're already in Australia, etc. But regardless, we want to stay a little bit conservative. So $10,000 per user multiplied by 100 million users gives us $1 trillion, and Square's market cap now is like 120 billion. So if it grew into $1 trillion, that's basically a 10x from here by 2030. So that's only from Cash App alone. That's not including Square's other business, which is the point of sale system business, and their kind of Shopify business style as well. So I bought a little bit more Square from reading this report, kind of opened my eyes to, my God, there's still opportunity there for Cash App. Cash App is really what I'm interested in. Like Cash App by itself is probably worth 100 billion. And you can see Cash App is actually growing faster than Venmo. It's kind of hard to see there, but it's growing a little bit faster than Venmo and will eventually outtake Venmo, in my opinion, by from number of users, because their marketing campaigns are much better. So this is also where you can see the number of users using digital wallets. It's already 230 million. So that's right now. So if we extend that out 10 years, you can easily see how Cash App could get to 100 million US users, never mind foreign or international users, and with only $10,000 worth. So we can see their figure brings them up to 4.6 trillion, which would be like a 40x if Cash App got there, but they're obviously not going to get all the users. But you never know. So, and here is another interesting fact. Venmo is valued at only $250 per user right now, so way undervalued in their potential in the future. Cash App is at $700. So Venmo, looking into PayPal, perhaps could be a better buy than Square for some people, so definitely keep that in mind. Robinhood's also quite cheap, but not as cheap as Cash App or Venmo in comparisons to what they should be, according to ARK. So next we have one of my favorite topics, Bitcoin's fundamentals. I love Bitcoin. All right, let's talk about Bitcoin a little bit. But yeah, Bitcoin isn't the most popular topic on my channel because my channel is kind of a stock market channel, and anytime I put up Bitcoin videos, I'm crazy about Bitcoin. I love Bitcoin, and I'm also interested in other cryptocurrencies, but they don't get as much love and as much views. So we got to mostly stick to the stock market, but sometimes I'll be bringing out some Bitcoin videos. So let's quickly have a look at what ARK Invest think about Bitcoin. They wouldn't be my number one choice for Bitcoin investment research, but definitely something to look into anyway. So this graph right here is kind of showing you how long people are holding their Bitcoin. And so the longer people are holding their Bitcoin, kind of shows that they're more interested in hodling their Bitcoin for the long term rather than getting in and out. We can see in 2018, there were a lot more wallets who are only had their Bitcoin for 3 to 6 months or 1 day to 3 months. That's 40% now. You can see how much it's declined, and now 60% of Bitcoin supply has been hodled for more than a year. So that means people are holding the Bitcoin for the long term and are less likely to sell, which would eventually mean that the price should escalate. This is an interesting graph actually. So they're showing the Bitcoin price in green. So you can see the price of Bitcoin has gone quite high, but the Bitcoin price search volume is still relatively low in comparison. So this was the bubble in 2018 or the very end of 2017. But the price has risen now, but the search interest isn't there at all. So that means once the search people aren't really talking about Bitcoin, but the price is already going up. So what happens when people start when retail starts getting really interested in Bitcoin? What's going to happen to the price then? All right, so up next we kind of talk about DeFi. So that's decentralized finance. So that's doing everything that companies on Wall Street do, except using a decentralized network to do those tasks, like futures, like lending, like banking, anything that you think of traditional finance companies. This can be done on the blockchain with no one actually doing it. It's just being automatically done using a smart contract, and there's no corporation doing it. There's just miners who would validate the transaction. So I would lend my Bitcoin. No person would be able to stop me. It would just go into the blockchain. I would lend my Bitcoin and I would get interest from the person I'm lending it to. And there's no middleman required, and we can just do that for free using decentralized finance. So they're just showing here. So ARK Invest are just showing here that DeFi, which is completely, almost exclusively, mostly like 90% at least, built on Ethereum. We can see how much it's growing since June. So total Ether value locked in DeFi is at 15 billion, which is from $0 to 20 billion. Not too bad. In the future, I think this could be hundreds of billions easily. And if that were to take place, then the value of Ethereum, because to do any sort of transactions on the Ethereum blockchain, you have to use Ether. So to use Ether, you need to buy the Ether, which increases the price. And then once you use the Ether, in the future, it will be burned potentially. So that's ETH 2.0. So I'm not going to get too deep into that because I don't know that in depth. They're also showing the stablecoin market cap. So the stablecoins are also built on Ethereum, which requires Ethereum. That's one of the reasons Ethereum makes up like 30% of my cryptocurrency portfolio, Bitcoin being about 50%, and then altcoins like 20. Now they're showing how Bitcoin could play a pivotal role as corporate cash. So instead of keeping cash in your balance sheet like Apple and Facebook and Google have fucking tons of cash on their balance sheet, putting a little bit into Bitcoin because, you know, cash is burning. It's a melting ice cube, as Michael Saylor would say. You should put it all into Bitcoin and watch your value of your company double every year, like MicroStrategy's company has and Michael Saylor's company has. But if you don't want to do that, you can put 0.1% in, you could put 1% in, or you can put 10% in. And this graph shows how much that would increase the price by, if every company in the S&P 500 put 1% of their cash into Bitcoin, that would increase the price by 50,000. So Bitcoin's price would then be $90,000, sorry, $80,000 right now. Or if on average, the S&P 500 put 10% of their cash into Bitcoin, that would increase Bitcoin's price to $400,000. But in the far, far future, they will be putting 100% of their cash into Bitcoin. And who knows what the price will do then. I'm just kind of messing, but maybe. All right, again, topic number 6, Bitcoin. I'm sure some of you are very happy to hear that. So Bitcoin preparing for institutions. So not just retail and not just companies buying it, also institutions like hedge funds, pension funds, insurance company, sovereign wealth funds, etc. So that's right now there's retail and there's companies coming into Bitcoin, but maybe the next step is institutional investors, and institutional investors are already buying Bitcoin, so it's happening, whether you like it or not. So ARK Invest believe that Bitcoin's $500 billion market cap, it's actually much more than that right now, but this was created at the end of 2020. Bitcoin has moved up to about 800 billion, 700 billion now. They believe it could get to 1 to 5 trillion in network capitalization during the next 5 to 10 years. I think this is quite an understatement personally. I think it's going to go to 1 to 5 trillion in the next 1 year. So by the end of the year, it's going to be at least 1 trillion for Bitcoin. I'll show you why if you're not sure. Let's have a look at the Bitcoin. So let's have a look at the Bitcoin chart for the last since its inception. So this is the oldest chart for Bitcoin, the BLX ticker that you can get on TradingView. So here are the monthly candles for Bitcoin since it's the first few transactions. So since it was 8 cent, 5 cent, what's that, 1 cent. We can see the cycles that Bitcoin takes. It gets into a peak, following a halving, it gets into a peak, blows off, starts slowly accumulating again, then there's a halving, blows up, and then crashes hard, 80% drops, then goes through another halving, blows up, crashes. That was the 2017 peak. And then we recently had another halving right here. Let me try and move this. So now we're on the cusp of doing another one of these. We're literally probably, so we've just crossed the all-time high. So we're about here on the map, or sorry, here on the chart. If the previous cycles are to say anything, we're about here on the chart. So to say we're only going to get to here by all the way for 5 years away, which is way out here, I think that's a bit of an understatement. I think just looking at these charts, I know that's not enough, but there's a lot more fundamental analysis that I've done on Bitcoin. Personally, I think it's going to go a lot higher, a lot sooner. So it's going to go somewhere in this neighborhood, which is 260,000 off the map, off the chart. Yeah, it's going to go off the charts. It's going to go to anywhere from 150 to, I've even released a video that I said it could potentially have a super cycle this year and get to 700k by the end of the year. Now that's completely wild speculation, not financial advice, etc., etc. But I think it could happen, and you can see my reasons for that in that video. Anyway, let's get back to big ideas from ARK Invest. So yeah, this is one of the reasons I'm not too fond of ARK Invest research on Bitcoin, but it's just because I'm way too much of a Bitcoin bull, so I'm very, very biased. So I think it's going to go a lot higher than they're saying, and a lot sooner. So these are all the validations that Bitcoin has gotten recently. So this is all in the last year or two. Now they're showing that how uncorrelated Bitcoin is in comparisons to everything else. It's just uncorrelated because it goes up so much. So like obviously it's going to be uncorrelated because it just destroys everything else because it just has gone up so much, and I believe it will continue to go up so much. So low correlation with everything else, some correlation, very low correlation with real estate, negative correlation with bonds because bonds go down. So yeah, the highest correlation is with real estate, and you can see how everything else is pretty correlated with other things. So S&P 500 is correlated with everything. Bonds are actually negatively correlated with everything. So you could buy bonds if you want. I wouldn't. Anyway, not the most interesting thing in my opinion. I'm not interested in correlation. I just want gains. I don't care about correlation. But I'm just I'm just a millennial boomer Bitcoin bull. So don't listen to me. So now they're just showing how Bitcoin trading is getting enormous. So it's almost at similar levels to Apple's average daily volume in trading, which is actually quite low. I think Bitcoin, will continue this trend and eventually be similar to the entire global US equity volume, and then eventually potentially the global FX. But that's a lot of transaction volume. So that's just showing how useful Bitcoin is in transferring value between people. But to use Bitcoin, you don't need, like, Bitcoin won't be used as a medium of exchange. It'll be used as a store of value mostly. So there won't be a lot of volume on the Bitcoin network, in the fact that you won't be sending 1 cent to someone. You might be sending $100 million from someone in Saudi Arabia to someone in Alaska on a weekend. So that's kind of more the use case of transactions on the Bitcoin blockchain. Now, there's other ways you can purchase Bitcoin. It's becoming more easy for institutional investors to get in the likes of Bitcoin futures. That means they can hedge their positions and stuff like that. Probably not so useful for the likes of me and you, but because it's more useful to institutional investors, means that they can invest in it more easily. So very, very useful to know that institutional investors can now hedge their bets on Bitcoin, etc. So here they're looking into Sharpe ratios. It's not something I know very much about, to be honest, but they're saying someone's portfolio should range with Bitcoin anywhere from 2.5% to 6.5% for maximum Sharpe ratio. And you can see the higher percentage, the higher gains are going to be, and 2.5, the lower your volatility is going to be. And I'm probably way up here, I'll take the maximum gains and the maximum volatility. I don't care about volatility. I just want gains personally. I don't care if my net worth fluctuates. It doesn't make any difference to me. All I care about is my net worth in 10 years when I retire. So now they're saying something I also very much agree with. Institutional investment could have a substantial impact on Bitcoin's price. So based on the 2.5 to 6.5% allocation that we talked about in the last slide, they believe that will add, 1% allocation will add 100,000 per Bitcoin if all institutions start to invest in Bitcoin. 6.5%, so this is the maximum Sharpe ratio, will bring Bitcoin's price up by $500,000. I think 6.5% is probably a likely number we'll see in the not too distant future for allocations to Bitcoin. I don't think on average Bitcoin institutionals will allocate a lot higher than 10% of their assets to Bitcoin. Like, some institutional investors will have 0 to 1% Bitcoin, and some might have 20%, but I don't think they're going to be putting like 50% plus into Bitcoin itself. So I think this is a fair enough. So this, in 1 to 5 years, I believe this can happen. So bring up the price by 500,000, plus this bring up the price by another 400,000. We're already at 900,000, and we haven't even taken into effect the biggest movers of all, which are retail investors. So we're already at 900,000 per Bitcoin. Let's say 1.5 million per Bitcoin when retail gets in. And then once central banks get in, it's game over. Bitcoin's in the millions easily. So that's why I'm pretty heavily involved in Bitcoin. So I think we're going to stop it there for today. I think we got through a fair amount, and we are halfway through this slide. I really hope you enjoyed this video. Make sure, if you want to see the next video, you are subscribed. I'm almost at 2,000 subscribers, so get me to 2,000 subs ASAP Rocky would be muchly appreciated. So I really hope you enjoyed the video. I hope you learned something, and I can't wait to see you in the next one. Cheers.